It's 2025. Two markets, two completely different worlds. One promises speed, chaos, and life-changing gains. The other offers stability, structure, and compounding power. You've got the same problem every trader faces. Do you ride the storm of crypto or walk the steady road of stocks? Which one will make you more money? And more importantly, which one will you survive long enough to profit from? Today, I'm not giving you hype. I'm giving you the truth. Volatility, returns, risk, stripped down to the psychology that will make or break you this year. You can feel it, the tension between two markets, two very different promises. Crypto, fast, volatile, and tempting you with stories of 10x gains that happen before breakfast. Stocks, steady, structured, and quietly building fortunes over years. It's 2025, and you're standing right between them. And the question burning in your mind isn't just, which will make me more money? It's, which one will I actually survive long enough to profit from? You see, this isn't just about picking an asset class. It's about picking a psychological battleground. Because markets don't just test your capital, they test your patience, your discipline, your resilience. And in 2025, both crypto and stocks have evolved into sharper, faster, and more demanding versions of themselves. Let's talk about the temptation. Crypto has matured, but not tamed. Bitcoin is still swinging hard. Ethereum is pushing into new tech territory. Altcoins are still pumping and dumping like wild stallions in an open field. There are stories every week of traders turning small stakes into life-changing wins. And yet, in the same breath, there are stories of portfolios wiped out overnight. One bad entry, one over-leveraged position, one forgotten stop-loss. Crypto rewards speed and punishes hesitation, but it also destroys those who confuse adrenaline for strategy. Stocks? They're not your grandfather's slow game anymore. AI, high-frequency trading, global economic shocks, the market moves faster than it used to. You can still get double-digit annual returns in strong years, but those smooth upward charts hide the sudden drops, the false breakouts, the gut-check corrections. And here's the trap. Stocks test your patience. Crypto tests your control. Both will break you if you bring the wrong mindset. The truth is, most traders frame this question all wrong. They ask, which market is better? As if there's an objective winner. But markets don't pay out based on which one has the better track record. They pay out based on which one you can navigate without self-destructing. That's why today's question isn't just crypto versus stocks in 2025, which makes more money. It's which one matches your psychological strengths and which one exposes your weaknesses. Because you can master technical analysis, fundamental analysis, news flow, and every piece of data on your screen. But if you can't control what's happening in your own head when the price moves against you, you're done. No market can save you from yourself. So here's what we're going to do. We'll break this down into volatility, returns, and risk. Not just as statistics, but as living, breathing forces that change the way you act under pressure. We'll compare crypto and stocks through the only lens that really matters, how they make you behave, and how that behavior affects your money. Because at the end of this, you won't just know which market can make more, you'll know which market you can win in. Chapter 1. The decision you can't avoid. You can feel it, can't you? That constant pull between two worlds, the old and the new. On one side, the stock market. Regulated, historical, familiar. On the other, the crypto market. Wild, unpredictable, dripping with stories of overnight millionaires and sudden collapses. It's 2025, and you're not choosing between just two asset classes. You're choosing between two mindsets, two types of emotional journeys. You've seen both headlines. Dow hits record highs. Bitcoin surges 40% in a week. And you've also seen the opposite. Tech stocks plunge 12% in a day. Crypto wipeout erases $200 billion in hours. Here's the truth. The battle isn't just about returns, it's about your psychology. Because you can read every forecast, every price target, every analyst note, but when your screen is glowing red or green so bright it feels unreal, it's you who has to decide. Do you hold? Do you sell? Do you double down? Let's start with stocks. The stock market in 2025 isn't the slow-moving beast it was in your parents' day. High-frequency trading, AI-driven hedge funds, global geopolitical shocks, they've sped up the pace. Sure, the S&P 500 still moves in single-digit percentages most days, but earnings seasons and macro news can send it swinging faster than you'd expect. Advantages? You're buying into companies with real products, services, and cash flows. Dividends can soften the blow when prices dip. Regulation and oversight mean you rarely face total loss unless you choose badly or leverage dangerously. But the flip side? Growth feels slower. That get-rich-quick urge can make you impatient. Bear markets, while not daily occurrences, can still drag on for months, draining your energy. Now, crypto. It's 2025. The space is far more mature than it was during the wild ICO days. But don't fool yourself. The DNA hasn't changed. Bitcoin still moves like a freight train without brakes. Ethereum and the big altcoins have institutional interest now, but the volatility? Still intense. And if you wander beyond the top 20, you're back in the Wild West. Advantages? Lightning-fast gains in short periods. 24/7 markets. You can trade while stocks sleep. Decentralized finance opportunities, staking, yield farming, ways to make your assets work. Risks? No circuit breakers, no pause buttons. If a crash starts at 3 a.m., it'll keep going until you wake up in a cold sweat. Scams, rug pulls, and overhyped projects still lurk. Governments are still figuring out regulation, and new laws can crush prices overnight. And here's the thing nobody tells you until you're in the middle of it. Your emotional wiring reacts differently to each market. In stocks, you might feel the grind of patience, boredom when prices move sideways. In crypto, you feel the rush, the thrill and fear compressed into every hour. Which one suits you better? That's the question that determines more than returns. It determines whether you survive long enough to enjoy them. Because the market, whether Wall Street or blockchain, doesn't just test your capital. It tests your heartbeat, your sleep, your discipline. And in 2025, the decision isn't going away. You have to face it, and you have to choose your battlefield. Chapter 2. Volatility, the double-edged sword. You already know the textbook definition. Volatility is simply how much and how fast a price moves over time. But when you're the one holding the position, volatility isn't just math. It's adrenaline. It's the knot in your stomach. It's the difference between calmly sipping your coffee and spilling it all over your desk because your phone just buzzed with a 12% drop alert. Let's strip away the theory and look at what it feels like in 2025. In stocks, volatility has crept upward. Macro shocks, war headlines, surprise rate changes, supply chain disruptions can make blue chips dance like small caps. One day, Tesla is up 8% on delivery numbers. The next, it's down 9% because of a tweet or a lawsuit rumor. But even at its wildest, stock volatility is usually bounded. You've got circuit breakers. You've got closing bells that force traders to stop and breathe. You've got analysts on every channel telling you why something just happened, even if they're guessing. That structure, whether you realize it or not, softens the blow. It gives you space to think, space to decide without making a 2 a.m. panic trade. Crypto? Completely different animal. First, it never sleeps. No bell, no break, no pause. Bitcoin could be plus 15% when you head to bed and minus 20% when you wake up, and the market won't send you an apology note. Second, volatility spikes harder and faster. One whale moves coins to an exchange, the market senses it and prices shudder. An unexpected regulatory announcement in Asia? Suddenly, the entire global market reacts in minutes. And third, the leverage culture in crypto magnifies everything. In stocks, 2-to-1 margin feels like a big deal for most retail traders. In crypto, platforms still let you crank it to 20x, 50x, even 100x, turning a small movement into either life-changing profit or a total wipeout. Here's the kicker. Volatility can make you money, or it can take you out of the game. If you can ride it without flinching, if you can see a 15% drop not as disaster, but as opportunity, you can turn volatility into fuel. That's why some traders love crypto. The swings create constant setups. More trades, more chances. But if you're wired to panic, if red candles make your chest tighten and green candles make you overcommit, volatility will chew you up. It will make you chase, overtrade, and ignore your own rules. In 2025, volatility in stocks is like riding a strong river current. You feel the push, you have to steer, but it's predictable enough to plan for. Volatility in crypto? That's whitewater rafting during a storm. Thrilling, but if you fall out of the boat, the water won't slow down for you. And here's where most traders fool themselves. They think they can handle crypto's volatility because they've read about it. They think they're prepared because they've set stop losses or sized positions small. But your mind isn't tested until you see your $10,000 position turn into $6,500 in a single night. Until you get that itch, the one that whispers, you could make it back if you just go bigger on the next trade. That's why volatility is more than a statistic. It's a psychological stress test. It's the hidden exam every trader takes, and most don't realize it until they're already failing. Now, you might be wondering, if volatility is this dangerous, why even bother with crypto at all? Why not stick to the slower, steadier waters of stocks? Because volatility also feeds potential returns, and returns are the carrot that keeps you pulling forward. In the next section, we're going to put the two side by side, not just in numbers, but in realistic outcomes, so you can see where the money really lies in 2025. Chapter 3. Returns: Reality versus Fantasy. You've seen the charts. If you invested $1,000 in Bitcoin in 2015 memes. The decade-long S&P growth graphs that make compounding look like a magic trick. It's easy to believe that one market is the golden ticket. But in 2025, you can't just look at past returns. You need to see the patterns, the sustainability, and the odds you'll actually capture those gains without losing your nerve. Let's start with stocks. If you were disciplined, diversified, and consistent over the past few years, the numbers are solid. The S&P 500, driven by AI adoption, green energy expansion, and resilient consumer spending, has averaged high single-digit to low double-digit annual returns. Nothing earth-shattering in a single year, but across time, that's serious wealth-building power. The magic of stocks isn't in one explosive trade, it's in compounding. 10% on $10,000 is $1,000, but 10% on $100,000, that's $10,000. And 10% on $1 million, that's 6 figures a year without lifting a finger. But here's the catch. Stock returns feel slow in real time. When you see crypto doubling in a month, waiting a year for 12% can feel like watching paint dry. And that's when temptation strikes. You start taking bigger stock positions, chasing high-growth tech plays, or dabbling in penny stocks, turning a safe plan into a gamble. Now, crypto. This is where stories get dangerous. Yes, in 2025, you can still see assets explode 200%, 500%, even 1,000% in a year. Layer 2 scaling solutions, AI-powered DeFi platforms, tokenized real-world assets. These innovations are pulling in huge capital. And if you catch the right wave early, you can turn $5,000 into $50,000 faster than you've ever imagined. But here's what the highlight reels never show you. For every coin that 10x's, dozens quietly vanish. Projects rug pull, teams disappear, regulations hit hard. And those eye-popping gains, they only exist if you sell at the right time. Too many traders hold too long, waiting for just one more run, only to ride the chart all the way back down. There's also time in the market versus timing the market. Stocks reward time in. Even if you buy at less than perfect entries, long-term market growth tends to bail you out, assuming you're in quality companies or broad indexes. Crypto rewards timing. If you're late to the pump, the downside can be brutal. You can't just hold forever on a failing altcoin and expect it to recover like a Fortune 500 company. That means the skill sets are different. In stocks, patience and discipline create wealth. In crypto, agility and precision protect it. Here's the truth you might not want to hear. Crypto has higher potential returns in 2025, no question. But it also has higher potential for catastrophic loss. Stocks will almost never 10x in a month, but they'll also rarely go to zero overnight. So when you ask, which will make me more money, the answer is brutally simple. Whichever one you can stay in without blowing yourself up. If you can stomach crypto's chaos and cut losses fast, you might outperform stocks. If you need stability and compounding, stocks will quietly outpace most failed crypto experiments over the long haul. But there's one more angle, and it's where most traders ruin their own returns. Risk management. You can have the best market in the world, but if you over-leverage or over-allocate, it won't matter. The next section is where we'll face that truth head-on, because the risk in returns is the invisible killer of both portfolios and confidence. Chapter 4. Risk, the silent profit killer. You think risk is just numbers, percentages, stop-loss levels, risk-reward ratios neatly written in your trading journal. But risk isn't just what you calculate before you click buy. It's what creeps in after you're already in the trade. It's the whisper in your head when the price moves against you. It's the urge to just add a little more when you're already overexposed. And in 2025, both crypto and stocks have their own brand of risk and their own way of testing your discipline. Stocks first. The risk here often feels less dramatic until it isn't. You might think you're safe because you're holding Apple or Microsoft, but earnings misses, government fines, or a sudden change in leadership can wipe out years of gains in weeks. There's also sector concentration risk. In the last few years, AI stocks have become the new must-own. But if you've put too much into the same hot sector, a downturn hits you like a freight train. And then there's leverage. Sure, brokers cap you, usually at 2-to-1 for retail, but that doesn't stop people from maxing margin at market tops. It feels safe, right until a -7% day wipes half your equity and triggers a margin call you didn't see coming. Now, crypto risk. Here, the threats aren't just volatility, they're systemic. Exchange hacks, smart contract exploits, regulatory bans, even network failures. And the leverage? It's still insane. You can open a 50x leveraged long on a meme coin at 3 a.m. and be liquidated by 3:07. Crypto also has liquidity risk. Sure, Bitcoin and Ethereum have deep order books, but move down to mid-caps or micro-caps, and you can't always sell when you want to. Slippage eats your exit alive, turning what should have been a small loss into a portfolio dent. But the biggest risk isn't in the market. It's in you. In stocks, the slow pace makes you complacent. You might skip stop losses because it'll bounce back. In crypto, the fast pace makes you reckless. You might ignore position sizing because it's gonna moon. The real danger is letting your emotions dictate your risk. Fear makes you cut winners too soon. Greed makes you ride losers too long. Here's the uncomfortable truth. The traders who ask, which will make me more money, crypto or stocks, usually ignore the fact that risk destroys returns faster than returns can save you. If you make 50% in crypto one month but lose 50% the next, you're not even. You're down 25% overall, and mentally, you're wrecked. It's why the best traders in both markets think in risk per trade, not profit per trade. They survive by never betting enough to be knocked out in one bad run. They treat capital like oxygen, not lottery tickets. And here's something else. Risk tolerance is personal. A setup that feels safe to you might feel insane to someone else. The same volatility that fuels one trader's strategy might cause another trader to blow up. This is why your best market is the one you can manage risk in without breaking your own rules. Because the longer you stay in the game, the more chances you have to hit the trades that actually change your net worth. So if you're serious about deciding between crypto and stocks in 2025, you can't just look at headlines or historical returns. You have to ask, which market's risk profile can I live with, day after day, year after year, without sabotaging myself? Because the truth is, profits are built on survival, and survival is built on respecting risk. In the final section, we'll bring it all together: volatility, returns, risk, and I'll give you the brutally honest answer to which will make you more money in 2025. Chapter 5. The Final Verdict. So here you are. You've weighed the volatility, you've compared the returns, you've stared down the risk. And still, the question hangs in the air. Crypto or stocks in 2025, which will make you more money? The easy answer would be to say crypto, because the numbers on the best trades are undeniable. The easy answer would also be to say stocks, because compounding over time is unbeatable for consistent growth. But the truth, neither will make you more money unless you can master the one variable that matters most: you. Let's be real. If you can't control your impulses, crypto will eat you alive. It will hand you the thrill of huge wins and then yank them away with twice the speed. It will tempt you to overtrade, overleverage, and overstay every position. If you can't stay patient, stocks will bore you into mistakes. They will tempt you to abandon slow gains in favor of risky plays. They will make you second-guess your long-term plan every time the market has a bad week. In 2025, crypto is still the king of high-potential returns. It has projects that will 5x, 10x, maybe even 20x before the year ends. But the majority won't. Most will fail quietly, and the market won't refund you for being early or hopeful or sure this time was different. Stocks remain the king of sustainable wealth building. If you want to grow capital over decades with less chance of catastrophic wipeout, the stock market still offers the most reliable path. But the gains are slower, and if you crave excitement, you might undermine your own portfolio chasing thrills. So which one makes more money? Here's the honest answer. If you're highly disciplined, can cut losers fast, and thrive in chaos, crypto will give you more opportunities for explosive growth in 2025. If you value stability, can hold through slow stretches, and want compounding to do the heavy lifting, stocks will quietly make you richer over time. And there's a third option nobody talks about enough. You don't have to choose. You can allocate. You can split your capital in a way that lets you chase high crypto upside without risking everything, while your stock holdings compound steadily in the background. This hybrid approach isn't flashy, but it's how many pros play the game. Because here's the thing, it's not the market that makes you rich, it's your ability to survive in it, to stay calm in volatility, to protect your downside before dreaming about the upside, to stick to your plan when the world is screaming for you to do the opposite. You're not just choosing between assets in 2025. You're choosing between two different emotional landscapes, two different sets of temptations, two different kinds of storms. And whichever one you choose, or however you mix them, your success won't come from predicting the next big move. It will come from the boring, unglamorous truth of trading psychology. Control your emotions, control your risk, and the profits will take care of themselves. So the question isn't crypto or stocks. The question is, which battlefield do you trust yourself to win on? Conclusion. You don't get rich because a market is good. You get rich because you stay alive in it, because you can take a hit without folding, because you can sit on your hands when it's boring and pull the trigger when it's right. So crypto or stocks in 2025? It's not about which one's better, it's about which one you can win in. You're not choosing between assets, you're choosing the battleground for your discipline. And in the end, the trader who survives is the trader who profits. So, after all the charts, the comparisons, the warnings, where does that leave you? You've seen the truth. Crypto is still the wild frontier in 2025, volatile, unpredictable, and packed with opportunities for massive gains. Stocks are still the foundation, slower moving, more regulated, but just as capable of building wealth if you let compounding work for you. But here's the thing. The question you came in with, which will make me more money, isn't the one that matters most. The real question is, which one can I survive in without blowing myself up? Because profits mean nothing if you can't keep them. One bad month can erase a year's worth of good trades. One undisciplined night in crypto can turn a winning streak into a crater. One over-leveraged stock position can take you from comfortable to cornered in a heartbeat. The truth is, you don't have to choose one forever. You can build a strategy that takes the best of both worlds. Let crypto feed your growth with carefully sized, high-upside plays. Let stocks be the bedrock that compounds over decades. You don't have to be a crypto trader or a stock trader. You can be a capital manager, someone who plays both games, but on your own terms. Still, even with balance, there's a hard truth you can't escape. Crypto will give you more opportunities for explosive growth, but it will also give you more chances to destroy yourself if you lack control. Stocks will give you steadier, more predictable growth, but it will also tempt you into boredom trades if you can't sit still. The market that makes you richer is the one that fits your emotional blueprint. If you thrive in chaos and can cut losses without hesitation, crypto might be your weapon. If you thrive in structure and can ride out slow stretches without overreacting, stocks might be your fortress. But there's one last lesson you need to carry with you. It's not the asset class that creates the wealth. It's the discipline you bring to it. The patience you show when nothing is happening. The restraint you keep when everything is happening. The refusal to gamble when the urge is strongest. Because in the end, trading isn't about predicting the next big move. It's about making sure you're still standing when it happens. So, crypto or stocks in 2025? Neither is the automatic winner. The winner is the trader who adapts, who survives, who respects risk, and who plays for the long game, whether in the storm of crypto or the steady tide of stocks. And if you can do that, then it won't matter which market you choose, because you'll make money in both.